Why you need to get into futures day trading? Because most assets that you know of day trading, you need usually $20,000, $50,000, and you can start with small amounts. When it comes to day trading futures, you can start with $3,000 and leverage as if you would have $300,000, $600,000, or $900,000. So actually, when you press buy or sell the button and you would just wait for 1 or 2 hours, it could be that you lose really $1,000, $2,000, or you could really make $1,000, $2,000. And this all depends on 3 key factors. This is the entry, a stop placement, and then a take profit. You could buy, and if the market continues to go up, make money. But if you buy and the market goes down, you lose money. You can sell. If the market goes up, you lose money. But if the market goes in your favorite direction, goes down, then you start to make money. There are many different kind of markets, and the S&P 500 futures is one of the best markets. Why? Because there are many trading platforms where you have a free demo account. For example, using TradingView, you just pay nothing at all in the beginning and you could start trading using a demo account. If you use a replicated market, if you just type in US 500 instead of ES1 exclamation mark, elsewise it will cost you like $20 or $30 a month, and you could work first with a demo account. That means with a not real money account that you learn in a safe environment and first try a good trading strategy out. When it comes to day trading futures, the advantage is that you have really low margin, it's called. That means from a $3,000 account, you could use only $400 of margin for just buying one position size. And with each position size on the New York Times, that means in Central Time 9 a.m. to 4 p.m. if you have there 1 or 2 hours available time to trade, if you just press buy or sell, you either make or lose $500 or $1,000. This is absolutely awesome because it's giving you enough cash flow. Now, when you have a solid trading strategy, I'm having a trading school where students also have results. They make around $400 to $1,200 first with a $3,000 account that is not real. And some people in the same period start them with a $500 account and make their first $200, $500, $3,000 in the first year using the strategy is to use a 1 minute chart. Because when having a 1 minute chart, we have 60 candles within 1 hour. And the advantage is that there will be days where it's hard to read where the market goes, but there will be days if you trade for 3 weeks or 5 weeks in a routine 2-3 times a week for 1 or 2 hours, because you may want also to reach time freedom, time independence, instead of hanging around the computer for 4 or 5 hours. Because usually if the market is easier to trade, it is when you have lots of green candles or lots of red candles. And it's more harder to trade when you have just the market wiggling around too much. And some people say that at most times the market is going to wiggle around. You will face a hard time that the market goes in one direction. But here's the thing. This is something what is very important. It is not to trade every day, and it is not to trade to make every day like a specific length and money. It is literally only to have winning trades when the market is running properly. That means when you see a lot of green candles, it makes more sense to trade a green candle because you see that the dominant side is up because the green candle shows you that the market was going higher. And then there will be some days where you lose money. But for this now you have something that is called the risk reward ratio. This means when you, for example, have lots of green candles and you enter the trade after a green candle and you have a stop placement under the green candle, now with the position size, you can adjust your trade around $180-ish. There's a tolerance on it. You can't always like exactly put $100 on it, but you could have a tolerance of 30%. That means $80, $70, $100 a trade in average. And when the trade is winning, you would make $350 to $500 in average if you do this right. That means if you have a good money management strategy. That means, for example, first of all, you want to see that the previous 10, 15 candles are more green or more red. That means more green for buying, more red for selling. Second thing is you want to understand where does the market likes to go at. And those are bigger structure highs and lows. Check out the one or the other video that I made. I'm explaining there what are bigger structure highs and lows. And then the third thing is, do you see small enough green or red candles for your buying or selling entry? A very good thing would be a color switch. That means a combination of a red and a green candle and a green and a red candle, that you can have a tight stop placement. For example, lots of green candles, a red candle is in between, a green candle is in between. There are no 4 or 5 red candles in between is very important, because when the market goes up, the market will do usually 1 or 3 red candles in between. And if the market for once starts to make 4 red candles, this is where the market starts literally not to trend that much. So you want to see a lot of green candles and maybe 1 or 2 or 3 red candles in between a couple of times. That's totally fine. And then the chance to trade a green candle, that means when you have a red candle and a green candle, is more higher that the market continues to go in that direction, versus if you see a couple of times that the market has 4 red candles in between or just like starts wiggling around. Try to compare this. When the market goes down, also the same. When the market does more than 4 green candles, for example, for the first time it's not a big deal, but the second time, this is where it gets hard, because usually the market have reached a specific target. When you look on the left side, the biggest structure low, the biggest structure high, whatever it is, usually it just shows you that the market has less pressure. Try to compare this in your trading, the past hours you were trading, and I'm telling you, you should be able to see, or I hope literally that you can improve your trading using this one.